Think of converting 86% of all the losses you experience to winning trades or break even. That's crazy. That's how important this is. Trade with the 20-period moving average. Now remember I talked to you about the two moving averages, the two main moving averages we utilize. The 20-period moving average and the 200-period moving average. Now, as a general guideline, I want you to note whether the 20-period moving average is rising or the 20-period moving average is declining. When the 20-period moving average is rising, your best bet is to be a buyer. If the 20-period moving average is declining, your best bet is to be a seller. All right. So we play in the direction of the 20-period moving average. This will keep you out of trouble. This will ensure that you're playing with the power, with the trend, with the flow, and not against it. This will ensure that you're not swimming upstream, making an already complex, difficult activity called trading even more complex and more difficult. We want the wind behind our backs. We want the power on our side. We want to bet with the winning side. And the 20-period moving average tells us who the winning side is. If it's rising, the buyers are the winning side. If it's declining, the sellers are the winning side. Now, knowing this, we're going to ignore anything that tells us if the 20-period moving average is rising. We're going to ignore everything that's red. And we're going to pay attention more to green removing red and green surges. Green surges. Green removing red, green surges removing red. We are not going to see this red and think that we should be playing to the downside. This is a mistake. The 20-period moving average rising is saying don't be intimidated by red. It's only temporary. It's fake. It's not real. Don't get scared of the color red. The 20-period moving average is saying that we have nothing to fear during the temporary periods that the stock goes down. When the 20-period moving average starts getting flat, that's a different story. I'm talking about when it is rising. Red doesn't matter. We play to the upside. And what do we play? Remember, we play surges, we play green surges, and green color changes. Always keeping in mind what our risk units are. The 1-bar loss rule. Guys, let me explain this to you. I did a 6-month evaluation on every losing trade from my traders. All right. Every losing trade. We just jumbled all the losing trades together and we did a study on the losing trades. It was something like 86% of every losing trade violated step number 5, trading against the 20-period moving average. 86%. I'm going to repeat that. 86% of all the losses over a 6-month period, they were trades against the 20-period moving average. Now think about this. This statistic suggests that 86% of your losing trades will be because you violated this law, this rule. What if you don't violate this rule? This potentially means that you gain back 86% of your losses. Think of converting 86% of all the losses you experience to winning trades or break even. Wow, that's crazy. That's how important this is. Guys, here's that Uber trade again. Look, the 20-period moving average is rising, which tells us don't get fooled by red bars. Don't let the red bars shake you. Don't let the red bars make you nervous. Don't let these red bars make you drop your valuable asset. You stand your ground, and we're going to place our faith in the upside momentum. All right? Not in the temporary red bars. So what are we looking to do? We buy surges. Boom, surge. We buy surges that take out red. We buy greens that trade above red. We buy greens that trade above red. We don't play red bars when the 20-period moving average is rising. We ignore red bars. Do this, and I promise you, you're going to eliminate a big portion of your losing trades. It's not enough to keep your losses small. Look to the left. You see where the stock and the 20 are tight together? That's when you can get an explosive move. When your stock originates its life from a tight position. Now you see how the moving averages now separate and go wide? The game is over. You see, the game from narrow state is a beautiful game. From a wide state, the game is over. The most explosive moves above the 20 are going to come from a narrow state when all three items, my 20, my 200, and my stock, are all clustered tight together, not wide apart like that. So we can't play the color game up there. We can't buy into bars from wide states. We only do it from narrow states. I would say we stop right there. No more. No more. Not even this one. Too wide. So there are many other things like this that I can teach you that go beyond the scope of our talk with these 5 things. There's so much I want to teach you. Notice in this case, I've got the 20-period moving average. This is Twitter, guys. I got the 20-period moving average moving down. It's telling us bet downward. Bet on a move down. It's telling us don't get shaken by green bars. They're temporary. Don't get fooled by the green. Don't let the green shake you out. All right. Who are you when the green bars happen? Do you get scared? Do you start crying? Do you stick your head in the ground and pretend like you're an ostrich? Do you get shaken out? Do you eliminate the trade? Are you weak? Are your hands weak? Or do you remain strong as long as that 20-period moving average is declining? I want my traders remaining strong. Now, how do we play? We play surges. Boom, red surge. Boom, red surge. Boom, you see that? I love those. We play red surges. Boom, red surge. We play red surges. Boom, we play red surges. Boom, in the direction of the 20. We also play red bars removing green bars. Boom! Red bar removes the green bar right there. Remember what you're supposed to do? If you're entering here, as soon as red crosses below green, your risk unit. Look at that small risk unit and look at the potential win. There's your snowman. All right? Beautiful. Red eliminates green. Boom. Look at your risk unit. Red eliminates green. 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 Guys, this is boring now. But it's good. But it's a good boring. Many people traders are out there. They are overcomplicating this game. You realize that? They're making this game far more complex than it really needs to be. The market is not difficult. You're complex. You're difficult. You bring your complexity to the game and you make it complex. You bring your difficulty to this simple game and you make it difficult. You bring your lack of a trading plan to the game and you expect it not to be hard. You bring your lack of discipline to the game and you expect it not to be hard. You bring your faulty ideas, your erroneous beliefs, your lack of a strategy, your gambling ways, your limited amount of capital, like you can show up to a gunfight with a knife and win. You do all of these things and then expect good results. It's not the market that's hard. It's not trading that's so difficult. You are the difficult one, and you've got to stop. You've got to make sure you show up to this game with the right amount of capital, because little amounts of capital don't work. I don't care what the marketing of various organizations say. You can't play this game with little baby pieces of money. It doesn't work. You can't play this game without a well-defined trading plan. You can't play this game well without accumulating the right experience first. You can't play this game if you're not abiding by a proper rule-based approach. You can't do it. This trading well doesn't just fall from the sky. It just doesn't happen one day. And so many people are out there, you know what they're doing? They're doing the same thing every day, losing practically every day, and just waking up the next day and hoping that today is somehow magically going to be different from yesterday. Not changing anything, mind you. Not even knowing what should be changed, mind you. Just simply waking up and praying, I hope today is different from yesterday. Like good trading just spontaneously shows up like an angel. Ah! Like, really? You've got to put in the work. It's got to be done strategically. You've become good with the right practice, with the right experience, with the right rules in place, with the right discipline. Step by step. There's a process to this. It just doesn't appear. All right. So we're trading with the 20-period moving average. Guys, here's another part of the day with Twitter. Again, look at what the 20-period moving average is telling you. Remember what I told you about narrow than wide? Look at how you're more narrow here. And look at when you go wide. Look at the stock is wide away from the 20. The 20 is wide away from the 20. Whereas that here they were relatively close. And here they go wide, right? Game is over wide. Game is just beginning. Power surge. Boom! When it's narrow. Narrow to wide. Over. Done. Repeat. Narrow in. Wide out. Repeat. Narrow in. Wide out. Repeat. So if we think about this, look at this beautiful power surge. Remember I told you we like surges off the 200 or off the 20. I don't care which one. That's a beautiful surge red bar off the 20. Boom! What's my risk unit? That one bar. Look at this green bar, red bar, breaks the green. Here too. Red bar breaks the green. Red bar breaks the green, but not this one. You know why? Because we're starting to get a little too wide here. But my traders are taught that if you get in near the 20, you can take some profits away from the 20, see? And you get in a little near, you don't have to be touching, but you can take some profits away. You get in a little closer to the 20, you can take some profits away. The market has this tendency to go near, away, a little nearer again, away, a little nearer again, away. You see? And once we go wide, that's when you can possibly start going back the other way. I get all the time people say, Oliver, why do so many traders fail? And these are the reasons I'm telling you. They don't have a maximum loss per day. They don't have a maximum loss per trade that they, in a disciplined way, adhere to. They don't have an approach or a method that tells them, don't play this price range, play that price range. And don't take this trade, take that trade, and do only 100 shares on that trade, but you can do 300 shares on that trade. And only play in the direction of the 20-period moving average. And please, by all means, don't lose more than one bar. There's very few traders applying things like that intelligently to their market play. You know what they're doing? And rolling the dice. That's what they're doing. As if that's going to generate a consistent life as a trader. It's mind-boggling to me. I've been trading traders for 28 years, and to this very day, it's mind-boggling how people actually think they're supposed to be good in the beginning. How are you good in the beginning of something? No one's good in the beginning. I'm not talking about the freaks out there that somehow they're able to play basketball like a pro coming out of their mother's womb. I'm not talking about that. That's so rare, it's not even worth mentioning. I am talking about what applies to 99.9% of the people on the planet Earth. You cannot be good at something at the beginning. You're supposed to be bad. But you're supposed to become better and better through building the correct amount of experience. How many people know this, realize this, and start going to work on building the right experience so that down the line they can become good? No, very few people want to put in the work. I don't want that to be you, but very few people out there want to put the work in. Very few people want to methodically build their experience, trade by trade, the right way. They just want it to magically occur, traders. And this is why there's a 92% failure rate in this business, because no one wants to put the proper work in. Breaks my heart sometimes. Breaks my heart. But not you. It's not going to be you.